But let's talk about this with Rahul Shah. He's VP Equity Advisory Group at MOSL. Great to have you with us this afternoon, Rahul. What are you making of the markets and the kind of up moves we've seen in the last couple of sessions? Do you think this can sustain?
I think looking at the last 4 to 5 days, what we've been observing, I think more kind of a stability which we see in the markets. Post FNO expiry, we saw the good kind of run up in the markets, and looks like I think there's a good amount of short covering, and post short covering the stocks are just holding on. So and all the fresh selling by the FIs has been absorbed. So that itself indicates the markets somewhere has been stabilized out, and maybe it looks like to me that bottom has been formed for a temporary, for short term. So looks like that markets does not break 8050 in technical terms. It does not look like that the sell-off will continue at this juncture.
Rahul, in that sense, then, does it make sense to move out of your defensives? Which are the sectors that you'd see picking up? Because like consumption that we've been consistently talking about, there is amount of pressure that will last for some time now. But when you look at sector plays right now, looking at the kind of momentum that we've observed in the last few sessions, would you say that one can get out of the defensives and, try getting more value elsewhere?
I think need to be very choosy in picking up the stocks from the consumer space and to exit also from the existing levels. So my sense is that I would definitely pay more into aggressive bets rather than a defensive at this juncture, because the correction what we saw in the markets and stock wise is almost the same or maybe higher in the non-consumer or non-defensive space as well. So my sense, if we believe that going forward, the earnings will revive in a quarter later, or maybe the overall economic scenario will revive, then I feel the risk to reward will be favorable more in participating in other sectors rather than pure defensives. So I would still bet not on the defensives, and obviously advise into other sectors to bet on right now.
If you talk about the kind of sectors that you've focused on, but let's talk about CLSA, which has had a bearish view on Idea Cellular. The stock has been trading in the red. It's down almost 3 to 4%. Let's connect with our research team. Shail is joining us from there. He's been tracking the view that's been offered by CLSA on Idea as a stock. So what are they making of Idea as a stock right now? What's CLSA saying about it, Shail?
Right, so recently there have been some news reports which have indicated that Idea may possibly go ahead and sell some stake in its towers business. On the back of that media report and news flow coming in, CLS has gone ahead and written a small note on the same. They go ahead and say that the company may sell its 9,772 towers to an investor for $1 billion. And this news clearly is report-based. Company to retain 11.2% strategic stakes in Indus Towers, reducing debt by 15%. EBITDA, on the other hand, too could be hit by 5% with tower rental costs. The company needs operational improvement, as in first half of FY17, and the operator also needs added data spectrum as its own 4G spectrum coverage. The company, the CLS has also gone and said that the reported deal valuations are in line with Bharti Infratel's current valuation. Idea's towers have a lower tenancy ratio of 1.68 times versus Bharti Infratel's 2.2x, and thus reported valuations factor in a premium. They retain their sell recommendation with a price target of 68 per share, and on a net basis, they say that the potential deal could boost FY18, FY19 earnings estimates by 4 to 10%.
Rahul, do come in on the telecom space right now. Those pressures have built over a period of time, but we're talking about Idea in particular. But when you look at the entire sector right now, what's your advice to your clients?
I think we've been, neutral, or maybe in the stock, entire sector has been underperformer for quite some time. Forget this demonetization. Before earlier also, the stock has been underperformer for quite some time. So I think we are neutral on it. So maybe the opportunities in other sectors and stocks is much more higher. So I would obviously avoid, but at the kind of correction which has happened in overall telecom space, so obviously the reward cannot be great, but the risks from here also will not be higher. So I think the prices and the valuations, what they're trading at this level, so the downside obviously looks very limited from here, my senses, but upside, yes, that also remains capped for the investors.
Like you said, you've got to be very stock specific when you look at these markets right now. So the risk reward ratio needs to be considered. What are some of your picks right now, Rahul?
I think my sense is that the way your NBFCs and few select housing finance companies have corrected, so we are quite positive on that segment as a whole. We have some private sector banks have also corrected decently at this juncture, so they are also one of my favorites. PSU, obviously the leader SBI looks quite promising at the current levels. Then pharma names, I think Sun Pharma obviously has been an underperformer for quite some time, but I think looks like near to the bottom. Even IT pack as a whole looks interesting now. So I think valuation makes very comfortable. Tech Mahindra remains my top pick in that, and Infosys being the second, followed by it. So I think these are the few ideas we are quite positive on in the markets and buying at declines, or maybe recommending to our clients as well as from current levels.
Sure. And all this discussion, of course, we cannot leave out demonetization. It's top of mind right now. In fact, a view coming in from Jeffrey is about the limited impact this is going to have on a stock like Bharat Electricals. Let's find out what exactly they're making of Bharat Electricals as a stock. Hiral, my colleague from our research team, is also joining us. Do paint us the picture now. What is Jeffrey saying? They seem to be bullish on Bharat Electricals. Tell us why.
That's right. So what Jeffries has done is they interacted with the defense industry experts and the ex-management of Bharat Electronics. Now, what they are saying is that demonetization impact is expected to be relatively limited, and they have 110 to 130 billion rupees annual order flow visibility over the next 3 years. So the order book looks really healthy if you talk about the next 3 years for a Bharat Electrical. Now, rising R&D focus, capex, as well as shareholder-friendly measures of buybacks are the key positives that are expected to work in favor of a Bharat Electrical. And additionally, they are factoring in completed buyback. They have a buy target, they have a buy status on the counter, and they have a target price of 1,650, which has been increased from a 1,600, which works out to almost a 24 times PE in terms of our FY18 estimates are concerned. And we have seen an upgrade to the tune of almost 50 rupees. And currently, if you go to see, the stock has been trading in the range of around 1,400 to 1,450. So it's an upside of almost 200 rupees from the current market price. And yes, demonetization impact is expected to be limited. The kind of spends that the company has been doing in terms of R&D is concerned, that is giving them a positive outlook, as well as the kind of order book that they are envisaging over the next 3 years is expected to be pretty healthy, on the back of which a buy on the counter.
Rahul, I know you mentioned NBFCs and PSU banks. On the light of whatever's happening in the demonetization space, what are the opportunities by way of stocks that you're looking at specifically?
Sorry, come again?
I was saying that since you talked about NBFCs and PSU banks, are there particular opportunities that exist by way of the demonetization drive? There are upsides to certain stocks. Which ones would those be according to you?
I think obviously where your housing finance companies, which we're talking about, where the lab book is low, or maybe it's pure home financing, or maybe and the ticket size is lower ticket size. So those, obviously, in that minds, what we've been recommending is that Canfin Homes, we saw the sharp recovery in that stock as well. So that is one of the stock we've been quite positive on in housing finance space. In NBFC space, Bajaj Finance is one of the other stocks. I think management gave a commentary a day after demonetization, so that also looks attractive. So we had a decent correction in that. So in that particular space, I think these two stocks looks attractive. And PSU bank's perspective, I already mentioned that the leader being the best play to play on such kind. So I think SBI remains my top pick in that perspective.
Fair enough. Hiral is still with us. What about Investec, Hiral? Now, they've been bullish on Bharat Financial Inclusion as well. Since we're talking about the entire space, Rahul also bringing in certain points when you talk about NBFCs, the MFI space, looking quite attractive right now in the light of everything that's happening. Tell us now what we're hearing on Bharat Financial inclusions.
So in terms of where Bharat Financial is concerned, what Investec has done is they've revised the target price to 840 and they do maintain a buy on the counter. Now, the collection data as on the 25th of November highlights a collection efficiency of almost 97.1% on 11th November dues. So they are seeing improvement in terms of a collection situation is concerned. However, pressure on disbursement growth does continue somewhere. Now, channel checks suggest that demonetization triggered collection issues in Maharashtra, Madhya Pradesh as well as Uttar Pradesh, and the collection issues in terms of where political intervention was concerned, which merits cautious in terms of where short-term call goes. So over the short term, yes, we are expected to see some bit of trouble that might continue on the back of political intervention as well as the kind of negative triggers that have come on the back of demonetization if you talk about where collections are concerned. However, the collection data so far is pretty encouraging, and only the next 3 to 4 weeks are expected to be pretty critical. Now, disbursements are likely to remain under pressure till cash withdrawal limits are eased by the RBI in terms of where banks are concerned, and lower loan growth as well as increased credit cost estimates is what is expected if you talk about where FY17 estimates go, on the back of which they have revised the target price. But overall, if you go to see the long-term perspective on the stock is positive in terms of where Investec is concerned. Yes, short-term pressures are expected to be there. Only the next 3 to 4 weeks are expected to be critical, and as we know, the government had given a 50-day deadline if you talk about where demonetization is concerned, where the impact was expected to be felt. So short-term, some issues, however, long-term, a positive call coming in there.
That's right, and more or less in line with what we've been hearing on the stock from other brokerages as well. In fact, let's get in a view from CLSA on Torrent Pharma as well, and I'll go across to Rahul to get his view on pharma stocks, while he has said that Sun Pharma is his favorite over there. What are you hearing, Hiral, about Torrent from CLSA?
So in terms of where Torrent Pharma is concerned, now they have a buy rating on the counter. What they are saying is that the valuations are pretty attractive for a Torrent. Now, the Indian business is pretty strong and US is expected to recover going ahead. They've upgraded Torrent Pharma to a buy from a outperform with an unchanged target of close to 1,730. Now, the Indian business, which is almost 35% of sales, continues to gain momentum. They're seeing strong execution that has resulted in a sharp improvement in field force productivity as well as improved profitability as well. They're expecting US sales to recover in FY18, led by around 10 to 12 new launches. And if you talk about where EBITDA margins are concerned, they are expected to remain strong despite the high R&D spend that the company has done. And this is mainly to accelerate US filings. Now, a solid domestic franchise coupled with strong presence in terms of our emerging markets is concerned is making Torrent Pharma an attractive buy, at least in terms of the mid-cap space is concerned. Additionally, they're expecting US to witness a 20% CAGR over the next 2 years. And in terms of where margins are concerned, now R&D spends have increased sharply to 7% of sales in the first half of FY17 from 4% in FY16. In spite of this, margins are expected to remain strong, and this is only on the back of improved profitability that they have been witnessing in the Indian business as well as in the Brazilian market. So these two markets have been really strong. US is expected to recover slowly. So these are the key triggers that have been making CLSA bullish on a Torrent Pharma, where they've upgraded the stock as well, and they have valuations also look pretty attractive.
Right, so it's looking good to CLSA. Torrent Pharma is the stock under question, and even while we are talking about Torrent, there is news on Sun Pharma as well that's flashing on your screens right now. Some 3.26 lakh Kenlog spray bottles have been recalled in the US. Now that continues to be a concern, but like I started by asking you, Rahul, defensive plays in volatile times, that's what you go with. When you talk about pharma stocks, you did mention a Sun Pharma. Torrent is what CLSA has been speaking about. Do tell us, which are the top picks right now and what would you avoid?
I think obviously Sun I did mention. Second, in mid-cap space, we've been quite positive on Granules. Of course, with the kind of valuation and then from the the money to be made from small to large companies, which will become over a period of time. So I think the valuation perspective and this correction has also helped. I think and pure domestic as well as global sales story puts together. I think Granules in a mid-size segment, what we are positive on, and obviously followed by other large cap names like say domestic play like Alchem, which is our other stock which we've been liking it. So I think valuation front, obviously Sun and Granules obviously a little bit expensive, but this story remains intact. So I think Alchem is other stocks which we've been liking.
Before I let you go, Rahul, I want you to stick your neck out and tell me where you see the Nifty at the end of the year and where you see the pickup happening 2017.
So I think if Nifty, I think 31st December, if you talk about, I think it should be closing around 8,500 levels or so. That's what my sense is.
All right, fair enough. Thanks very much for joining us with your take on the kind of sectors to look out for and certain stocks as well. And that's a view coming in on the Nifty from Rahul, from Motilal Oswal. We'll take a very quick break. After that, we're going to discuss the impact of demonetization. That theme doesn't go out of fashion in